All right, well, good morning, everyone. Thomas Montgomery here. It's a beautiful Wednesday morning, December 21st, 2022. Hope you're off to a great week as we head into the holiday season here. We're going to talk today about the refundable deposit, what it is, why it exists, and a little bit of a different process. So let's begin by discussing it. With our what we call our access to capital program, it has several positive attributes, one of which is that there's no upfront cost. No upfront cost. Now, is there a refundable deposit? Now, if you're a white label partner, you can make it refundable or non-refundable, I know. And if you're a white label partner, you could make it more or less than $2,500, I know. But I'm going to speak off of our normal model. So from the time that a client enrolls, do they know that there is a $2,500 refundable deposit? Absolutely. Do we ask them to pay for it up front when they enroll? No, we don't. Could they? Sure, if they want to, and some do, but that's not the model. What we say instead is we will wait until after your first tranche of financing, your FTF as we call it, after your first round of funding, so that way it's financed. So that way they don't have to come up with the $2,500 out of pocket. First tranche financing, we have an app. They fill out the app. We take it to our consortium of about 40 different lenders, banks, alternative lenders, and so forth. And they compete to provide financing for the client. There's no hard inquiry, so no worries about that. And I was just talking to a client yesterday, and he had like 30 different offers, 30 different first tranche financing offers, some amounts larger, some smaller, some for longer repayment terms, some term loans, some lines of credit. It'll vary by the individual because that's what they qualify for when they first come to you and I. They've just enrolled. You and I have not done anything yet to improve their credibility on paper. We're just simply helping them get their first tranche of financing up front so they can pay you, so you can get paid your portion. If you're a white label partner, you're getting the $2,500. If you're an affiliate, you're getting $250. But regardless, we're seeing what they qualify for up front. Now, certainly there will be some clients that enroll and they don't qualify for any cash funding through these third parties. Well, what do? Do we tell them, oh, I'm sorry, go away, we're not going to help you? Of course not. What we say is that everyone is guaranteed at least $2,500 for their first tranche of financing. Now, again, where that comes from, how it's structured, can very much vary from individual to individual. Now, let's look at two different scenarios. So, well, three different scenarios. So we'll take a hypothetical client named Jim. Let's say Jim gets a $10,000 loan for first tranche financing. So that money then is wired into Jim's account. He pays the refundable deposit. He has the extra money left over for working capital. Will Jim need to make payments on the $10,000 financing that he just took out? Sure. Because remember, clients are coming to you and I. They're coming into the program wanting to borrow a lot of money. They want a lot of payments, don't they? Right? We can't be confused to think that somehow you and I are doing something wrong by people taking on debt. Debt in business is considered leverage. As long as they're able to invest that and generate a positive ROI, return on investment, then that's smart. So there's no doubt that clients are coming to you and I. They're coming into the program expressly wanting debt. They definitively want to start making payments to someone for that debt, right? Because that's how debt financing works. So we're using three different scenarios for Jim. Scenario one, he comes in, we get him a cash offer of $10,000, funds to him, great. So that's a perfect scenario. Now, maybe Jim got more than $10,000, maybe less than $10,000. That was just an example. Now let's look at scenario two. Jim fills out the app, We put it through the system, and he gets one offer for $2,500, cash funding offer from PenFed Credit Union, which we work with, or whatever lender. So then what happens? So then we just use PenFed Credit Union as an example. So PenFed wires over to Jim $2,500. He's got the money to pay the refundable deposit, so he's not paying it out of pocket. Now, does PenFed expect to be paid back? Do they want Jim to make payments, whatever the two of them worked out? Yeah, probably so, right? Because Jim just borrowed, in the first scenario, $10,000. Now in scenario 2, $2,500. So sure, now we're able to proceed, and we'll talk more about the refundable deposit in a moment. I want to go through these 3 different scenarios. Let's say that scenario 3, Jim did not get any cash funding offers from almost 40 different banks, credit unions, alternative lenders. No one thought that Jim was a good enough risk to loaning any money. Well, that sucks, but that's okay. We'll work with Jim, and we'll get him from where he's at to where he needs to be to get at least 100,000. That's our promise. That's our commitment. But if he didn't get any cash funding offers, then what we're going to do is send him this packet. And that's what I'm going through now, is this packet. And so essentially it's internal financing, if you will. So do we turn around and say, Jim, I'm sorry, PenFed Credit Union, 39 other banks, credit unions, alternative lenders all said no, you just got to pay us $2,500 up front? No, we don't go to Jim and say, pay $2,500 up front. We say, great news. You qualified for $2,500 of financing, and then this is the packet that he gets. So I just ask that you approach this in the right mindset, because I'll have some people that come back and kick back and say, well, wait, Jim's going to have to make payments. Well, hell yeah. He wants to make payments, right? He came to you. He came to us to get financing, eventually at least 100,000, but to get first tranche financing, so he didn't have to pay the $2,500 refundable deposit out of pocket. So yeah, Jim's going to have payments. Jim's going to have payments. All right, so let's go through this packet. This packet has been slightly revised as of today. So this is the roll up. We've made a couple tweaks. I'll give you the bottom line, and then we'll go through it. We are not going to set up clients on ACH pulls anymore. People seem to hate ACH pulls. So historically, when they went through the 0% financing, they gave us permission, and we set it up with the bank to pull the payments, which is pretty common, right? Maybe that's the way you pay your credit cards. Maybe that's the way your car loan, your mortgages. It's very common. But it seems that our clients hate it. And a lot of our referral partners hate it. So we're like, okay, so we won't do ACHs anymore. That's fine. So as of today, going forward, any new client signing up on what we call the 0% financing, those that didn't qualify for any cash funding, we won't put them on ACH. So that's fine. But we'll get to that in a moment. That's just the bottom line. So now let's go through the 4 pages of this packet that will be sent to them. And if you're a white label partner, you'll be copied on it. If you're an affiliate, you probably don't really care. So we have first, again, an explanation to the client of what this is about. Kind of in summary, what I just described to you. They've enrolled in the Access to Capital program. We've promised them at least 100,000. We need to build a loan package to be able to raise that 100,000. There's a $2,500 refundable deposit. Now, again, these are clients that have already enrolled. They're not surprised by this. They know that there's a deposit. From the moment they enrolled, before they enrolled, they knew there was a deposit, but they also knew and expected to not have to pay out of pocket, which we're not violating that promise. And so we said that we would defer the $2,500 until their first capital raise is accomplished. And this is, in fact, going to be their first tranche because they didn't qualify for anything else. So we're offering them 0% interest. Every once in a while we'll have someone say, well, you guys are predatory. And it's like, well, we're not a bank to start with, but if we are doing the financing for the refundable deposit, we're charging 0%. Now, a few of you know that interest rates can be negative, and they have been in the recent past. But typically you don't get paid to borrow money. Normally you have to pay finance charges. In this case, how much better does it get? 0% interest. Now, I know the argument can always be, well, maybe it's 0% interest, but they can't afford it. They can't afford it because they haven't gotten more funding yet. It's like, well, okay, I see the point there. We agree we need to build the loan package for them to be able to qualify for the additional funding. So what if we were to give them money to pay for the payments until they get their larger funding? And that's what we do now. And we'll show you that in a minute. So that's one of the tweaks. So that way they have positive cash flow from the beginning. All right, so we explained to them that they have two options. They can complete the 0% application, and then that allows us to proceed forward. If they want to just pay it, they can. And again, that's not what we're asking. We're not changing the deal. We're not coming to them in the 11th hour and saying, oh, now you got to pay $2,500 out of pocket. We don't want them to pay $2,500 out of pocket. That was not the proposition, and that's not what we're offering now. But they do need to understand that they have promised to pay the $2,500 after their first tranche. And we're offering them their first tranche now because, frankly, they didn't qualify for anything else. Now, if they qualify for something else, then that's what we're going to recommend. You know, would Jim rather have $10,000 of cash funding than scenario 3 of getting just enough to cover the refundable deposit? Probably so. But if you didn't qualify for it, it's not your fault, not my fault. Frankly, it's Jim's fault, right? I mean, Jim came to us, and first tranche financing is based upon the client's baseline credibility factors. So what we need to do is help Jim build his loan package, become credible enough so we can get him that guaranteed $100,000. So he's got two options, or any client would have two options if they don't qualify for cash funding. Well, fill this out or pay it, right? Now, we have the opportunity fund. This is really important. And I think a lot of you are so financially successful, you're dismissive of this. And honestly and directly, I think that's a mistake. There's a lot of people that are not cash flowing very well. They need extra cash flow to have working capital to accomplish what they need in the short term, even while we're working on the large capital raise. So if you're dismissive of the opportunity fund, I think you're making a mistake. I think you're providing a disservice to your clients. So page 2 of this packet now gives them an overview of the opportunity fund. The great news is the opportunity fund puts money in their pockets, money that doesn't have to be paid back. It's earned income. And it also puts money in your pocket because the way our affiliate program is set up, which is what this is based off of, pays them and you get overrides. So why wouldn't you want someone to plug in the opportunity fund so they have the money to pay their bills? Our goal is to get them $250 a day. But you know what also happens concurrently is you're getting $100 a day in overrides from their production. So if they were to do this, I mean, it's not get rich quick. It's not changing their business, but it puts an extra $1,750 a week per the plan into their business bank account. And for you, it puts an extra $700 a week and you did nothing, right? So the opportunity fund is a really important tool, strategy, device for those individuals that are not cash flowing well enough. So the opportunity fund description is included. Then we have the actual app, because again, the point of this packet that we're going through is to get the financing set up for the first tranche financing for the refundable deposit. So this app is the same as it has been. There's no changes. And so, of course, when it goes to the client, it's being sent to them via Adobe, and there's editable fields here. We're just all blank, but it's set up as a form, if you will. And then we ask for the opportunity fund. We need to know where they want the money to be deposited into, because if they're going to plug into the opportunity fund, that means they're getting earned income into preferably their business bank account on a daily basis. So this is not for us to pull money from. This is for us to deposit money into. So we ask them. Now, I will tell you that these fields are made in the Adobe as non-required. So if they don't want to provide their banking information, frankly, they don't have to. just so you know. And then also then they're agreeing to pay the refundable deposit. So it's just as it has been. It's 0% interest. It's the $100 payment. So, but instead of us doing an ACH pull, they're just going to pay us. And so we're setting this up as a trade line off of their EIN so it can report as a positive trade line as business credit for the clients. All right, so let me go back up to the top. What questions do any of you have regarding why do we collect a refundable deposit? When's it returned? How are you paid out of it? Anything regarding the refundable deposit? Let's talk shop here. All right, Sarah's asking when it's refunded. So the way the agreement is written, again, everything we do is in writing. So the way the agreement is written is that we are promising to work with the client to raise a minimum of 100,000, which is actually ironically right here. They are promising to work with us, or if you're a white label partner, with you to raise at least 100,000. So that's the trigger to no surprise. Once we've reached 100,000, then the deposit comes back to them. No different than if you and I went down to the local apartment complex and say, hey, we want to lease an apartment for a year. They would charge a deposit. We do what we promised to do. What happens at the end of the year? We move out. We followed the rules. We get the deposit back. That's the way deposits work. No surprises. So thank you, Sarah, for the question of when does the deposit go back to the client? All right, Kevin's asking about payout to you all. So if you're a white label partner, normally they're paying the deposit. Your clients are paying you directly. But if the client does not get any cash funding offers and you're a white label partner, then we can use this and we'll ask you your permission now going forward to use this. If you don't want us to use this, it's okay. It's really between you and them, right? Because the client owes you the $2,500 if you're a white label partner. Frankly, they don't owe us. But if you want us to set up and manage a system to collect that from them, of which we do a 50-50 split if you're a white label partner, so you're making $1,250 off of this, then we can use this. But we will ask if you're a white label partner and the client is submitted as a white label partner client, if they don't get any cash funding offers, we'll ask you, do you want us to set them up on the 0%? And if you say yes, then we'll be sending them an Adobe, copying you. It's going to be this 4-page document. Again, it'll have the editable fields in it. This is just the PDF versus the form itself. If you say, no, I don't want the client to be offered the 0%, fine with us. Now, what I would do if I were a white label partner and I referred in a client that didn't qualify for cash funding, this is what I would say. I would say, yes, send them the 0%, but wait. And if I were you, then I would go get them plugged in as a sub-affiliate of yours, because again, you can be a white label partner and an affiliate. How do you do that? You go to guaranteedfunding.org/partners. You get set up as an affiliate first. If you're not, free and easy, get a landing page. And then you go ahead and get them signed up as a sub-affiliate underneath you. By doing that, then you're getting the overrides as they're getting the money from the Opportunity Fund. All right, so Chuck asked a question, why do we even bother with the refundable deposit? Well, there's a couple reasons. Number one, it's how the agreement's written. But why is the agreement written that way? Well, you all deserve to be paid, right? And you're getting paid out of that refundable deposit. So if you're a white label partner, this is the way that you're getting upfront money. If you're an affiliate, this is what's paying you. That's how you're getting money. And so, first of all, I think you all deserve to be paid. And then the workers have to be paid. The people, the time, the energy, the resources that go into building their loan package isn't free. Now, to the client, I would argue it is free because it is a refundable deposit. They'll pay it through this financing, not out of pocket unless they want, and then they get it back. So thank you for that question. Now, if you're a white label partner and you want to waive the refundable deposit, so if you're a white label partner, you want to go out and enroll clients and you don't want them to pay the refundable deposit, that's your option, right? But that doesn't change the relationship between you and us. So just keep that in mind. All right, so who has questions on the refundable deposit, the 0% financing, and the two most significant changes to this packet would be as follows. The first of which is we're not going to do the ACH pulls for new clients because it seems like everyone hates it. And then we pull money and then they're like surprised, even though they authorized it, or there's not enough money in their account, and then they're screaming. So it's like, hey, okay, we won't do the ACH. Just pay us. And we know you're responsible. We'll get this set up as a trade line so it reports positively under your EIN. Yeah, just pay as agreed then. So that's what we're going to do because it seems like that's what everyone wants. Don't do ACHs, just allow the individuals to demonstrate their responsibility. Second issue or change or revision is what happens if they don't have the cash flow to pay the payments on the deposit. Because remember, we had Jim a while ago. So our example with Jim at the beginning of the call was, let's say that Jim got $10,000. He needs to have the money to pay it back. Jim should not go out and borrow $10,000 if he can't afford it. That's true if it's a bigger amount, or that's true if it's a smaller amount. Now, if it's $2,500, what we know is that's just enough for the refundable deposit. So yeah, Jim needs, or any client needs to be able to afford the money that they're borrowing. But you and I have an ace in the hole. It's like, well, that's okay. If your money's tight, don't worry about it. We'll plug you into the opportunity fund and get positive cash flow coming into you while we're building out your loan package. And it's set to be, and it could be more or less based on what the client does and what the client does and wants, but it's set off of a budget of $250 a day. So again, not to change their focus from their primary business, but for a lot of these early stage small businesses, if they had an extra $250 a day going into their business bank account, that's going to make their bank account look stronger, make their financials look stronger, and give them some cash flow to support themselves as we're getting their loan package ready. None of this is a distraction from the primary goal. The primary goal is to get their loan package put together, get them to committee, and get them at least $100,000. We promised that, but we have to get them credible enough for that, and that doesn't happen day one. Well, it could. There certainly are some clients that come to us and they're credible enough day one, but in other cases, we'll have to get them from where they're at to where they need to be. Questions, comments, concerns any of you have regarding this change? So how does it affect you? If you're an affiliate, it doesn't change anything. If you're, in my opinion, if you're a white label partner, you need to know that we're not going to do the ACH pulls on new enrollments because everyone seems to hate it. So, okay, if you don't like it, then I don't like it. So we won't do it. We'll just bill them and they can just pay us. They're responsible adults. They'll do what they say they will do. And if they won't make payments on $2,500, why in the world would we think that they would be responsible enough to pay back a loan of $100,000, right? Because that's an issue of character. So with that being said, this is a packet that will go to them if you're a white label partner after you've approved it, and then you'll be copied on it. So if you're an affiliate, this is just for your information. If you're a white label partner, the process has changed very slightly. If you submit a client, no cash funding offers. Okay, Karen's asking with clients, will they go straight to this? No. We're going to try to get them cash funding offers first, because typically that's what clients would prefer. They'd like to have more money rather than less. They'd like to have more than just enough to cover the refundable deposit. So if they qualify for cash funding, then that's what will be presented to them. But if they don't, it's okay. We're not going to leave anyone behind. And if they just say, well, I can't afford payments on the $2,500 refundable deposit, not a problem. We've got the opportunity fund to create positive cash flow for them so we can overcome that objection. Who has questions, comments, concerns? All right, Alex is asking what happens if the client signs up for this and then defaults? Well, we don't want them to default, and I guess it would be surprising if they defaulted because they agreed to it, and the payments again are at 0% and only $100, so it shouldn't be that difficult for them, especially considering that we're offering them the opportunity fund. But Alex's question wasn't that. It was, what if a client defaults? Well, if the client defaults, then that's bad, right? They're not doing what they promised to do. We've got a character issue at that point because they promised to do something that they've not done. And so then, of course, they're responsible to do what they had promised to do. All right, great questions. Who else has any questions, comments, concerns? Alfred's asking about next week, which isn't exactly on topic, but yes, we plan on having Zooms all week next week. We will have limited staff hours next week. We're going to be primarily focused on doing end of the year white label partner reconciliations, but we will have the Zooms in the morning, but we will be operating on a limited schedule next week between Christmas and New Year's. So any of you that are white label partners, of course, you should be scheduling weekly calls. We're hopping on the phone, going through all clients, reviewing status, making sure that they're on track to get funding, but we won't have those calls next week. It is very important that if you are a white label partner, you want to go back and look at every one of the clients that you submitted during 2022. And we want to make sure that those clients are being taken care of, that they're actively involved, that they're participating. Because every client, if they signed a contract with you, then we need to be delivering, right? We need to be getting them from where they're at to where they need to be to get their funding. So that is crucial. Questions, comments, concerns anyone has on the refundable deposit or anything else we discussed today? All right, well, you all are awesome. We will see you back tomorrow morning. Have a great day.